Another day, another Elon Musk bombshell that Wall Street seemingly doesn't care about, overshadowed by maybe some bad news. I say maybe because we don't know for sure, and I'll share that with you here in this video as well, but I want to start with the Elon Musk bombshell because it's exactly what I've been saying. We'll start here with the post itself from Robert Scoble. He says Tesla's AI is very underrated. Had two AI founders while my car drove us through San Francisco. If you have a friend with FSD, beg them for a ride. If you think Elon Musk has competition, you are simply wrong. There is none. Now, this individual, Robert Scoble, he does a podcast with AI startups, and he has about 502,000 followers on X. He just gained another one here. Elon Musk responded to Robert Scoble and says, yeah, 99% of people have no idea. I assume we're the 1% of people that have an idea or have a clue of what Tesla is really doing here. Elon goes on to say, and improvement will accelerate dramatically now that we are no longer AI training compute constrained. I think Farzad said it the best here. He just says, someone hold me. Honestly, if you know, you know. That makes a lot of sense. Now, Hunter Newberry, he says he is on his X profile a full-time FSD Uber driver. He says, I've been using it with my Uber passengers for 1.5 years. 12.3 is a complete game changer. Can use it on, in parentheses, in bold letters, any Uber trip now for the entire duration without the fear of a stupid mistake. I don't think even you guys fully understand how big this is, that Tesla is no longer training compute. I tried to explain this in one of my last videos, and I'll explain it again here briefly, and it's pretty easy to understand. But if you're, let's say, a human, and you want to read a book, for an example, you are compute constrained because you can only process information as fast as you can read it. If you are a computer, there is no such thing as compute constraint. A computer can read this Elon book in, what, a quarter of a second, probably? Something along those lines. If you get yourself a really powerful computer, these GPUs that NVIDIA is making, H100s, now it's going to be B100s for the Blackwell chips, you can start to progress at rapid rates of speed. So in theory, if Tesla is no longer compute constrained, you could see FSD really start to evolve here. And eventually, I think not even in the too distant future, you could start seeing applications for the robotaxi network. And it's really good news because Tesla has been making these huge leaps and bounds in FSD over really the past just couple of months. The markets are not paying attention at all. So if you are someone that can see this happening in real time, there's very few moments in your investing lifetime where you will see a product just changing the game for a company, and the markets just don't realize it. The markets are usually a pretty efficient place, unlike real estate where one person can have different information than the other person. In the markets, when there's a stock that a lot of people cover and talk about, you typically get a lot of price discovery in that stock. There's not a lot of things that can be found that are not already known by the markets. This is one thing where we know, but Wall Street has not picked up on yet. When Wall Street picks up on the massive leaps and bounds that Tesla is really making here, getting closer than ever to the robotaxi network, oh my gosh, the gains are going to be insane. I don't know about you, but I want to buy as many shares of Tesla as I possibly can, especially with this evolution that we're seeing in full self-driving. Remember, Tesla was never about building cars, ever. That was never the game plan from Elon. It was always full self-driving, robotaxis, the real innovation for the future. And I think a lot of people have forgotten about that as well. But then again, it's easy to get lost in the sauce, if you will, because we got some more quote-unquote bad news today. Now, I say quote unquote bad news because we don't know for sure if this is bad news. This article makes it seem like it's a guarantee that it's bad, but it says Tesla lowers EV output in China. EV major Tesla has lowered electric vehicle output in China amid tepid sales, according to Bloomberg. The company asked employees in its Shanghai factory to work 5 days a week instead of the 6.5 days they normally work. Now, I don't know if this is necessarily going to mean there's going to be less production in China. That's totally possible. That's a possible, scenario here. But based on what I can see is you have 223 job openings in China, 7 of which that are new today. It's also possible that Tesla has just hired a lot of employees. Instead of firing people, they reduce the hours worked in a week. That's also possible that I don't think is getting talked about at all. Wall Street is just running to conclusions saying that, you're shortening the work week for Chinese employees from 6.5 days a week to 5 days. Are you kidding me? That's 6.5 days out of 7. Of course, that should probably be lowered anyways. God forbid Tesla just hired more employees and they don't need as many. Instead of laying them off, they could just have them work less hours a week. That's a very plausible scenario. But there's a couple other things that stick out to me as well. If Tesla is doing this, then maybe they're slowing down production. Maybe they just hired too many people. Doesn't matter. I think a lot of people are also forgetting that I think Tesla's going to make the best choice possible for the business. I think Tesla's going to do what makes the most sense, right? We don't run Tesla. We don't know what makes the most sense for Tesla. And it seems like Wall Street just has it all figured out, that they could do a better job than Elon. And obviously that's far from reality. So if Tesla is really slowing down production, there's got to be a good reason for that. I hope Elon clarifies with us, maybe on X, on the upcoming earnings call, what's going on there. But I'm going to give Elon and Tesla the benefit of the doubt and say it makes sense, whatever they're doing. Now, what also kind of flies in the face of that, if they're really slowing down production of Model 3s and Model Ys, well, they just raised prices of the Model Y around the world. Well, not technically, but in their most important markets, Europe, China, US, Canada, they've raised prices of the Model Y. That would suggest the car's selling well, or that would suggest Tesla is really taking production off of the main topic of conversation for investors and hopefully focusing on margins a little bit more. You see where Apple stock is? Yeah, Apple has fallen a little bit recently because of antitrust lawsuits and all kinds of other things, but Apple was trading at all-time highs with negative year-over-year growth. Negative year-over-year revenue growth. Now, Tesla's not going to be negative year-over-year revenue growth, but if Tesla could get their profitability up, the stock will go higher. So that's kind of what I think Elon is doing. And I talked about that after the last earnings call, that it seems like to me, Tesla may start to focus more on profitability because they did not give a full year guidance for deliveries. They didn't give guidance for anything, albeit they could have said margins are going to get better. They could have had a little bit better, communication with the markets if this is their ultimate strategy. But I do think Tesla is focusing more on profitability now, and that's a win for shareholders. No matter if that means flat deliveries year over year or slightly negative deliveries year over year. If Tesla could boost their profitability, let's say 50% this year, that's a big deal. That is the whole deal. That's the whole shebang for Tesla stock investors. So these are really your two biggest pieces of news today. Obviously, Wall Street doesn't care about FSD. They don't care about what's going on at Tesla when this is like literally laughable because you have Dell Technologies CEO like praising FSD. And I mean, that company is in the AI craze right now. None of that rubs off to Tesla. Nobody gives a rat's ass about what Tesla is doing right now. Nobody does, because it's popular. It's popular to hate on Tesla. Tesla's the worst performer in the S&P year to date. It's popular to hate on Tesla. You get clients if you short Tesla these days. I don't think that's going to be the case. Just give it a couple of months. With that said, Tesla stock is down a miraculous 1.2% today. It was down a lot more than that. At one point, you hit a low of about $166. Tesla stock has actually recovered quite a bit throughout the day today. And even as we head into the end of the day, it looks like Tesla's really just accelerating to the upside here. Interesting. On a day where Tesla apparently slowed down production of its products, I think that just shows you how mispriced the stock potentially is, how bearish people are, that even what could be bad news, it definitely could be bad news. If Tesla's not focusing on profitability like I think, and they're just slashing production, then you don't get that slashing of production offset by better profitability. That would be bad news. But it seems like the markets are already pricing such terrible things for Tesla that even bad news is like, who cares? It's not even that bad. Tesla stock only down 1.2% is a pretty mild day these days for Tesla. Sentiment for Tesla stock today from StockTwits is bearish at 32. Yesterday, you were bullish at 55. So retail, for the most part, that's what StockTwits is retail. Retail's feeling a little bit more bearish today in Tesla stock, when in fact, I think you should be feeling as bullish as ever based on what Elon Musk just said. Message volume is 53 today, categorized as normal. Yesterday was 52, which was also normal, but a slight uptick day over day. And the participation ratio is at 54, which is categorized as normal, but it's basically where we have been for a while now. We also have some really good news today as well. Sawyer Merritt shares this photo from Brad Sloan on YouTube, where it shows 370 Cybertrucks that were spotted at Giga Texas today in the outbound lot. And Elon Musk comments and says production is ramping. And that's, again, one of those other things that I think is not priced into Tesla stock as well. All of this at the same time that Tesla's Giga Berlin protesters are planning to build more tree houses. Yeah. Let alone just burn down an energy transformer and shut Tesla down for a week. They're building more tree houses. Now, this is fascinating. We have the first branded Tesla V4 supercharger. Strange. It's from EV Point. This has got to be good for Tesla, but I didn't expect to see this soon. Sawyer Merritt says, do you want to feel like Taylor Swift for a day? Drive the Cybertruck. It's nuts how many people are constantly taking photos and videos while you're driving it. Kids, grandmas, moms, dads, teenagers, etc. They all freak out when they see it. I mean, this inevitably will cause a halo effect for the Tesla brand. And I think you're actually already starting to see that. If you look at Google Trends data, you're seeing an acceleration across the board for the Tesla lineup. The Cybertruck recently going from 31 to 32, the Model X staying at about 10, which is typical, the Model Y going from 32 to 33, and the Model 3 going from 34 to 36. You are seeing an acceleration across the board, I believe starting with the Cybertruck, but also having a halo effect to these other products as well. I don't think you can have a product like the Cybertruck that literally makes you feel like a celebrity when you drive it and that not have a positive effect for the rest of the brand, to rub off on the rest of the brand. I think that's a big catalyst that people are not appreciating for Tesla this year and especially next year. That could help really drive some volume growth for Tesla. Tesla is also running about 4,000 ads via Google. This could also help to boost some sales. Keep in mind that most companies advertise not really to boost sales initially, but to really spread brand awareness and to keep a brand alive in your brain. Let's say, for instance, you see a Tesla ad today. A year from now, your car takes a dump and you're like, what car should I get? You're starting to think about this. You might remember the Tesla ad that you've seen. Tesla might pop up in your mind because it's already in your subconscious because you've seen a Tesla ad. If you've never seen an ad, if you've never heard of a company before, It's hard to think of a company you've never been exposed to. And that's really what advertising is all about. It pays dividends for many years to come. I don't know if Tesla's running the right ads to the right demographics, but Tesla running ads is likely a positive thing either way. And Tesla never advertising before starting to advertise could give you an initial jump or boost in deliveries as well. As far as option activity today with hedge funds and institutions, this is the interesting flow sentiment. You have seen 505 orders totaling $421.18 million with a positive order value of 69%. That's pretty dang positive. Look at yesterday as well. You had 567 orders totaling $588.6 million with a positive order value of 78%. It seems like some hedge funds and institutions are actually going out there and buying some bullish exposure to Tesla. And I think when the stock is down this much, you really got to go against human nature. When stocks are doing well, people buy them. Right. Everyone, when Tesla was hitting all-time highs back in 2021, was, shouting from the rooftops that you need to own Tesla. Everyone was bullish, besides the bears that have always been bearish, like some of the individuals. I'm not even going to give them credit here in this video. Now what's happened? Everyone is bearish on Tesla. That's the, again, popular thing is to be bearish on Tesla, but you're actually seeing under the surface some hedge funds and institutions starting to get some upside exposure to Tesla. You currently have 3.46% short interest of free float with $16.56 billion currently in short positions. And what you would expect to see in a perfect kind of trading portfolio was you short a stock when it's high, you cover when it falls or when it's, down to really low levels. Right now, you're not seeing shorts covering. You're seeing shorts continuing to add on to their short positions at these already low levels. That means if Tesla stock does get some good news, starts to go higher, I think you could see a mini short squeeze actually occur. Just because the sentiment is so negative. Now, I don't know if a good catalyst or positive news is coming. Seems like that doesn't happen too often these days. Granted, Wall Street doesn't think so. I think about every day we get good news, especially with FSD. And as of recently, we've seen some of the best news of all with FSD V12, V12.3. Wall Street doesn't see it that way. So a lot of people could get caught off sides here fairly soon. I also think when we get closer to the first Fed rate cut, which is currently priced in by the markets for June 12th, 2024, Tesla stock will also start to perform better. That is, let alone if you see the economy start to fall or we start to, get some weakness out there and the markets start to price in the first rate cut in May. That's always a possibility as well. If that's the case, I would expect Tesla to start doing a little bit better. The fine line will be here is maybe a little bit of weakness in the economy and a lot of rate cuts from the Fed. That's your best case scenario. But if you get a lot of rate cuts from the Fed, but the economy is looking like it's going into a recession, which again looks far off right now, but recessions typically happen pretty quickly. That would be bad news for Tesla. That would really be bad news for the entire markets. And that's what I'm watching right now. I'm expecting some kind of weakness will be coming. Question is it a little bit of weakness? And does that prompt the Fed to cut rates aggressively? Hint, hint. I think so. We'll talk about that a little bit more in the next video. Or do we get big weakness that still gives us a lot of rate cuts, but really prompts recession fears? That's the thing you want to be watching right now. If you're someone that thinks a crash is coming, the bubble is bursting, or even if you're bullish in our markets, that's number one right now. Percent of stocks today above their 50-day moving average is down about 4%. So 4% of stocks out there in the markets are breaking under their 50-day moving average today. That's quite a rough day overall. We've seen rougher days, but this is definitely up there in the 50, 60, percentile of bad days for your average stock. So today is not a great day for your average stock, specifically your interest rate sensitive names. Your Russell 2000 is down about 1%, which again makes sense to why Tesla stock is down a little over 1% as well. The S&P is slightly in the red, down about 0.04%. The Dow is down 0.5%, and then the Nasdaq is the outperformer, up 0.2%. The VIX is also down 0.5%, which is interesting just given, how much red you are seeing in your average stock out there. Hedge funds and institutions, they're not rushing to get protection. And I think that's because the Fed is now your friend to the markets. The Fed is now more concerned about managing the business cycle, managing being excessively restrictive on the economy for too long rather than inflation. Even though we did see an uptick in inflation, the Fed did not care about that at all. It really leads me to kind of speculate whether the Fed knows something about the economy that we do not. And I'll talk about that in the next video coming out at 8 p.m. tonight. You definitely don't want to miss it. The Fed could be hiding something. And if you were wondering just how strong the Cybertruck actually is, well, take a look at this.
Cybertruck versus Random Objects Part 1. Stanley Cup.
Yeah, and I know what you're looking at. Look at the Cybertruck, okay? Don't look at her. Look at the Cybertruck. Gosh.
Golf club. Baseball bat. And last but not least, kettlebell. Cybertruck.
It almost looks like a trend now to abuse your Cybertruck just to see how much it can take, and it handles it well. Now, Tesla stock on a technical basis is kind of in limbo here. You're either going to fall back down to the low 160s, find support along this trend line, in which I could go ahead and extend this trend line out now, and that would be around 162 or so to find support, find another bottom there. Or if you break out above this other trend line to the upside, which prior served as support, we broke down, fell to this lower end trend line. This served as a little bit of a demand zone around the 160s, bounced back up above that, found resistance at this trend line. Now you're back down. If you get above this trend line again, that's where you get the more explosive upside, potentially back to the 190s, even into the 200s again. But from my perspective here, I think you need some good news for that to happen. I don't think Tesla is just going to magically start to rally. I think you need good news. Nonetheless, that gives you more time to buy the dip in Tesla, which is ultimately what I want to be doing. I'm not going to say that's what you guys want to be doing. You might want to do whatever you want to do, but I want to buy Tesla here, and I want as much time as possible to buy Tesla before the markets really understand the improvements that we have seen to the Tesla business over the last couple of months. One day, give it some time. One day the markets will realize, probably overnight, how much FSD has evolved, that the robotaxi network is actually coming in the not so distant future. I would say 12 months from now, we should have robotaxis in select cities operating. That's my assumption right now, based on the rate of progress we're seeing on FSD. After all, some taxi drivers are already using FSD to do all of their taxi rides. Now 12.3 really allows them to do that with zero intervention. So let me know what you think about this video down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, come hedge your portfolios, make some earnings trades. Seems like earnings season never ended, and we're heading back into a new earnings season in just the next couple of weeks. So come join the action over there. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.